every Monday to Friday. This is Peter Lewis's Money Talk.
Money Talk.
Good morning, this is Peter Lewis. A warm welcome to Money Talk for Tuesday the 20th of August, and thank you for listening and for making us one of the most listened to business and finance podcasts in Hong Kong. That's according to Pod Status. And this podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 50 million customers across 10 countries. In today's business and finance headlines, the annual meeting of the world's top central bankers commences in Jackson Hole, Wyoming this week. The highlight of the week is expected to be Jerome Powell's speech on Friday, where investors in the financial markets expect him to drop strong hints that the Fed is ready to start cutting interest rates at its next meeting in September. And the market is pricing in 4 rate cuts in 2024, according to CME's FedWatch tool. The cuts are expected to start at the September FOMC meeting, with the market seeing a 28% chance of a 50 basis point reduction at that gathering. The People's Bank of China is expected to leave benchmark lending rates on hold today. The one-year loan prime rate is forecast to remain at 3.35%, while the 5-year LPR, which is pegged to mortgages, is expected by a majority of economists to be left unchanged at 3.85%. Thailand's economy expanded at the fastest pace in 5 quarters, aided by tourism and exports, although a leadership change and uncertainty over a $14 billion stimulus plan clouds the outlook. Thailand's GDP grew by 2.3% year-on-year in the second quarter, faster than a marginally revised 1.6% in Q1 and above forecasts of 2.1%. And that was the highest GDP figure since the first quarter of 2023. However, a plan to start handing out 10,000 baht each to every adult Thai from November is in doubt following the change in leadership in the country. The owner of convenience store giant 7-Eleven has received a buyout offer from Canadian rival Alimentation Couche-Tard, known as ACT, and they run the Circle K chain. Tokyo-based 7 & I Holdings said it's formed a special committee to decide whether or not to accept the offer. Shares in 7 & I jumped by almost 23% in Tokyo on the news, and that gave the Japanese firm a stock market value of around about $38.5 billion US. And the deal is the biggest ever unsolicited bid for a Japanese company by a foreign acquirer. On today's Money Talk, we're joined by Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, David Roche, President and Global Strategist at Quantum Strategy, and in Washington, D.C., our US economics correspondent, writer and broadcaster, Barry Wood. And if you want to take a look at this morning's Asian Business and Finance newsletter, then please go to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
On Wall Street, all 3 major US indices climbed on Monday. The Dow added 237 points, or 0.6%, to finish at 40,897 in its 5th consecutive winning day. The S&P 500 rose 1% to close at 5,608, while the Nasdaq Composite jumped 1.4% and ended at 17,877. The S&P 500 and Nasdaq notched their 8th straight winning day, and that's a first for both indices this year. The S&P 500 has climbed almost 8% over its recent winning streak, bringing its advance for the year to 18%. And the S&P 500 now sits just 1% below its July the 16th record high. Treasury yields edged lower. The yield on the benchmark 10-year US Treasury note settled 2 basis points lower at 3.87%, and the 2-year note was 2 basis points higher at 4.07%. The US dollar fell to an 8-month low Monday ahead of the Jackson Hole Symposium. The US dollar index weakened to the lowest level since January, falling 0.5% to below 102. Asian currencies rallied as investors anticipate that the US Fed is planning to cut interest rates. The Malaysian ringgit, which is one of the region's top performing currencies this year, rose as much as 1.5%, and the Korean won strengthened 1.2% to a 5-month high. The Japanese yen gained 0.8% to 146.5 yen per dollar. That's the highest since it reached 144.25 on the 7th of August. In Shanghai, the yuan was 0.4% firmer at just below 7.14 renminbi per dollar. Spot gold held steady just slightly below Friday's record high of $2,508 per ounce. And that means that for the first time ever, a bar of gold is worth $1 million. Gold bars typically weigh about 400 ounces, so you can do the maths, $2,508, 400 ounces, $1 million. Brent crude tumbled 2.5% to $77.66 a barrel, and Bitcoin rallied back above $59,000 as US stocks surged. The cryptocurrency ended the session around 59,200. Hong Kong stock market led gains in Asia on Monday, boosted by Chinese technology companies. The Hang Seng Index climbed 139 points, or 0.8%, to 17,570. The tech sub-index jumped 1.7%, having risen 3% earlier in the day. JD.com added 3.9% after its quarterly profit nearly doubled, while JD Health surged 7.9%, making it the best performer in the tech index. On the mainland, the Shanghai Composite closed 0.5% higher at a two-week high of 2,894. Futures markets pointing for the rally in Hong Kong to continue this morning. Looks like the Hang Seng is going to add about 140 points, starting the day trading at 17,710. And you could get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Time to welcome our guests. We have with us this Tuesday morning Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia. Morning, Mark.
Good morning, good evening.
And also with us, David Roche, who is President and Global Strategist at Quantum Strategy. Morning to you, David.
Hello all.
And welcome back to our US economics correspondent over in Washington, D.C., Barry Wood. Morning, Barry, and welcome back.
Thank you very much. It's great to be back on the air. And good morning to you, Peter, David, and Mark.
And a lot has changed since you've been away over the last 5 weeks. The market has crashed. It's rebounded again. We've kicked out a presidential candidate, or you have. So let's start with the Democratic National Convention. It starts in Chicago Monday. Yesterday features speeches by Kamala Harris, Joe Biden, Barack Obama, and Bill Clinton this week. And then Kamala Harris's speech accepting the party's presidential nomination will take place on Thursday night. Now, the Vice President on Friday unveiled for the first time her economic policies. They include millions of new build homes, help for first-time home buyers, tax breaks for families, a ban on grocery price gouging. And she highlighted that the three key pillars of her economic plan are fighting inflation, recalibrating the housing market, and cutting taxes for families. Barry, how has this been received over there?
Badly. There's no doubt about it. Certainly in the business community and on Wall Street, even among some Democratic Party strategists, badly. These are interventionist policies. Perhaps that's not a surprise. I don't think very many consumers on the streets of mid-America would say that the grocery stores, whether that's Amazon or whether that's Walmart or whether it's Kroger, Albertson, etc., are the real reason that food prices are higher. So therefore, this business of price gouging, it doesn't resonate. And I say that with some conviction. As to the tax credit, yes, there was a somewhat milder version of that from J.D. Vance on the Republican side just a few weeks ago. So it must be an election year. And I think that otherwise, there's not much to be said about Mrs. Harris's economic policies. These are the beginnings. We've got a very interesting month or two ahead of us. I think all eyes need to be on the September 10th presidential debate. That is likely, in my view, to decide how the election is going to go.
Is the economy, is that the number one issue in this election?
I think polls indicate that it is the economy, and illegal immigration is a close second. Crime is also there. Foreign policy is not really a factor. China relations are not a factor. So, yeah, I think you're right. The economy is number one.
Is there a sense, Barry, that even if maybe these policies, she's going to have to maybe revise some of them or maybe even walk back from some of them, that nevertheless she's sort of, does she come across as appreciating at least what the big issue is for voters, which is, the big surge in the cost of living, rising prices? Does that help her at all in the sense that at least she recognises what the problem is?
It should help her, Peter. I think the real problem here for Kamala Harris is we really don't have a clue as to who she is. She's only been at this a few days and weeks. We hardly know. She hasn't had a press conference. She does speak to voters, and I think she's to be applauded. Her voice is holding up. She's done a bus tour right across Pennsylvania. Then she arrived in Chicago. I think she's off to a very strong start. But I don't think we really have a clue as to what she really stands for or what she really wants.
Mm-hmm. Mark, what are your thoughts here? These economic proposals have been described as populist gimmicks by one economist, and that they're not really addressing the real issue of what's causing rising prices.
The popular gimmicks were, I don't think from an economist, I think it was the Washington Post editorial, actually. But I listened to Ken Rogoff of Harvard when he was interviewed on CNN, and of course he thought you should walk back, especially the proposal on gouging by the supermarkets, but supported the tax credits, especially for children. Healthcare obviously has been a big focus of the Biden administration now, and cutting back the prices on some pharmaceuticals and some drugs, especially insulin and others. So some of those are there, but as Barry says, I think these have to work out. But I agree with him completely that, debates often aren't all that important. Obviously, the last one was, and I agree that the next one's got to be, because people don't know. And it's been mentioned before, if you check our website, and I just checked the campaign website, there's nothing there on policy. Mm-hmm. Which is, which is
on my mind.
Yeah, which is an interesting omission. So eventually, it's going to have to do that, and eventually, she's going to have to talk to the press and to others to outline this. But of course, the debate will sort of force her, and the convention will to some extent too. But the debate will have to force her to put some things on the table and react to what Trump says. Her advantage might be is that former President Trump's views on economics have been, to say the least, a little bit all over the place as well when he does focus on it. So there are some opportunities there, but whether she can take advantage of it, we actually just don't know, do we, Barry?
And presumably these policies have got to be costed as well. They're going to be pretty expensive, aren't they?
Yeah. No one has mentioned how they're going to pay for it. Either side, actually, they've been very reluctant to do that, and until that becomes a little clearer, that's another issue. Mm-hmm. So we'll see how they react. Certainly the enthusiasm, the big difference I think so far, and what effect it's going to have in the long run, it's hard to, or medium term even, it's hard to tell, is a difference in approach. The Harris campaign so far is much more positive, to say the least, than the Trump campaign. Mm-hmm. Is that going to make a difference? Are people looking for that, or do they feel that the situation is pretty dark and people have to be realistic about that? I think we'll see how that evolves too over the next few weeks.
David, when we last spoke, I think you said on this program that you thought Donald Trump was going to win, but then at that time he was facing Joe Biden, whereas now the situation has changed. Are you seeing anything at all that maybe makes you change your mind on that?
Well, I think everything that has been said about her lack of content may be because maybe she does lack content. And I would say, in addition to that, maybe she wants to run a campaign which lacks content and keep not addressing what I would call policy issues like the U.S. budget deficit, trade linked to jobs, of course, and productivity, but to continue to hand out tidbits. It's rather like feeding the birds in winter. You put it down, they come along, they pick it away, and she hopes that will give her enough votes to pass. So I've nothing to add to that, but I think the key to me, and I want to come down to why I believe this, and I am only backing what Mark and Barry have already said, I think the key is the debates. You've got two people in the debate, obviously, neither of them particularly, to my mind, attractive. Of course, one never smiles, the other never stops, and you get tired of both, frankly. But the debate, the key is this. Can Trump, whose policies we know, you may dislike him, but you know what his policies are. You know what he thinks about the Middle East. You know what he thinks about trade, and so on. Can Trump stick to a policy agenda during the debate and not turn around and criticize her on a sexist basis or a racial basis? Because if he does, he'll hand her the election. No doubt about it.
I agree with that.
View.
I agree with that. I think you're onto something,
Can I just
David.
add that if Trump sticks to the agenda of policy, then she has to too. And then we'll find out what she stands for. But at the moment, I don't know what she stands for on anything. And I doubt very much that she has at the moment anything but the ability to make it into a draw without a clean sweep of either house, by the way, which limits the ability to do the sort of damage she's talking about when she talks about spending and handouts. Sorry, I interrupted you, Barry.
No, you didn't. Actually, I just want to strongly agree with your sentiments. Can Donald Trump be focused on policy without name-calling, without deriding his opponent? I'm not sure. And clearly, it's not just the Democratic media that has identified the absence of President Biden as the opponent to Donald Trump as causing a great deal of consternation for the Republican challenger. I don't think there's any doubt about that. So Kamala Harris is a new entity for Donald Trump. And I don't think that he can get away with all this name calling. I think the public is tired of it. After all, it's not new. It goes back to 2016, 2020, and now 2024. So I think David is absolutely right. If he can stick to policy, he probably can win the debate and perhaps the election. If he starts the name calling and, let Trump be Trump, as he likes to say, wow, I'm afraid that could rebound strongly against him.
Just to reinforce what Barry said, some prominent Republicans have come out saying the same thing, including Lindsey Graham, Ron DeSantis, and Nikki Haley, among others. So far, it hasn't had much of an impact, Barry, but it might someday. I don't know.
It's hard to see, isn't it, in a debate, because he's well known for not being able to control himself and he's up against a pretty savvy prosecutor. This could go horribly wrong, couldn't it?
Look, is she such a savvy prosecutor? I can't be told that. But it's the level of intellectual insight, economic or otherwise, and the level of content in what she has said so far is the measure of the savvy of her as a prosecutor. The only thing I would say is it must be awfully easy to get convictions in California.
I think that's a little unfair. She was quite a successful prosecutor in California and made some real inroads there. Not perfectly, but it's different being a presidential candidate. A lot different.
And it is also true, Mark, that Kamala Harris has not performed well as an ad-lib
right.
speaker.
That's true.
If she reads from a teleprompter, she can pass muster. So this will be a test for her. I think just as we say for Donald Trump, can he stay on the message without reverting to his name calling? Can Kamala Harris put together sentences and arguments, as David suggests that she has no record of doing, and thus become very persuasive in the debate? We shall see.
Yeah, it's a fair point.
Okay, let's move on to another big gathering that's going on in the US this week. It's the top central bankers meeting in Jackson Hole in Wyoming. The highlight of the week is expected to be Jerome Powell's speech on Friday, and investors in the markets expect him to drop some strong hints that the Fed is ready to start cutting interest rates at its next meeting in September. The market's pricing in now 4 rate cuts this year. Cuts are expected to start in September, and the market sees a 28% chance of a 50 basis point reduction. And some analysts say that if Jerome Powell fails to deliver a dovish speech on Friday, equity markets could sell off once again. So, Barry, do you think that the Fed is ready now to start cutting rates?
I do, and I think that the rate cut is a foregone conclusion. I think it'll be 25 basis points. It could be 50. I think the real drama, the real action at Jackson Hole concerns the Bank of Japan governor, Ueda. I mean, he's got a lot of explaining to do. And I say that in a positive way, because it was only 2 weeks ago that we had this massive advance in the yen and all of this business about the carry trade. The yen, after Ueda had raised interest rates, it's amazing. But I think that intellectually, there must be a huge appetite for trying to understand what is really happening in Japan. And I think that the Professor Ueda is the man to do it. So, yes, Friday is an important speech because Mr. Powell will reveal whether it's going to be 25 or 50, or at least give some signals to that effect.
Mark, what are your thoughts here? The markets, businesses are hoping and praying that they're going to get this 25 basis point rate cut in September. If it doesn't happen, the potential is for another huge sell-off in the markets, isn't it?
Yeah, unless there's some dramatic change. Barry's much better on this. I'm going to defer to him. He's been pretty good on his forecasts. He sort of said September a long time ago for a rate cut, and also said that Joe Biden would drop out of the race. I know you said Donald Trump too, but that's pretty good.
Win some, you lose some, right?
Well, I think that's important, and I think the market is waiting for this, and so is Asia to some extent. You can even hear Hong Kong officials talking about it. Obviously, we're very closely tied to the U.S. dollar, so it's very, very important to them. So, in a sense, it'll send one signal. It certainly won't solve the problems. But I also agree that Ueda-san's movement will be important. I'm just not convinced he's going to say too much. He hasn't so far. He's been central bank governors are notoriously cautious. He takes caution to a new level so far, and his communication has been almost
and
non-existent.
I'm sure that he will depart Jackson Hole without saying a word to the media.
Yeah.
David?
So we're not sure where it's going to go.
David, the Bank of Japan's in a bit of an interesting position here, isn't it? Because having raised interest rates last month, and Governor Ueda said he was going to raise them again, they then trashed their monetary policy after the markets went down and said that we can't raise rates while the markets are unstable. This is a sort of a rather odd thing for a central bank to say, isn't it?
Well, not really if you're a Japanese central banker, because the whole thing is a tea ceremony. What you try to do is change things without anybody noticing that you're changing things, and therefore without the markets changing. And then when the markets do change, you put the whole thing into reverse, and it all appears rather silly. And the reason it appears rather silly is because it is. So I think Ueda, I mean, I'll put it frankly, I think Ueda is hopeless. But he'll be but there are some buts about this. Number one is they will raise interest rates again when they think they can get away with it without changing anything, or anybody thinking they are changing something when they are. But it'll happen again because they have to, and the yen will continue to appreciate. Now, what I want to say is something which is a little bit controversial, which is I don't think that the yen strengthening and so on is going to suck yen liquidity or cause Japan to repatriate assets. Now, they have enough assets to, of course, completely do great damage to global liquidity. They have $9 trillion worth of external assets. About $3 trillion of those are in portfolio flows. So if they all ran home like little sheep trying to get through a rather narrow gap in a fence in a field, then, of course, world markets would suffer a lot. But who on earth, managing any money in Japan, and they must be rational, would repatriate money given the quality of economic management you get? And the answer is nobody. So you're not going to get this great sucking sound of liquidity flowing back to Japan and the rest of us plunging into a market-led depreciation or deflation, and of course mental and economic depression. That's just not going to happen. So I actually disagree with Barry, which is extremely rare, but we have to sometimes. I think the majority of people at Jackson Hole don't give a flying toss about what's happening in Japan, because they're probably as Midwestern as the Midwestern people who are going to vote for or against Trump. So I don't think that's the issue. I think the issue will be what the chair says, and I think that what he's going to say is we'll take it steadily, we're data driven, and there's certainly no need to panic about cutting interest rates, because we had a little worry in markets about growth. If that turned out to be a reality, we would cut more, but it is not currently the reality. I think that's the message you'll get.
Yeah.
Barry, when you listen to some of the Fed speakers that we've heard over the past few days, like Mary Daly and Goolsbee from Chicago, they seem pretty confident about the soft landing, don't they? They think that the economy is still in a pretty good place. It's slowing down, but it's still it's not in recession.
Yes, that's correct. And I think that is going to be the consensus view when the Fed meets in September, absent any surprises, either in markets or in data. But it does seem to me that a slowing economy, there are worrying signs, but go back even 7 days, not 2 weeks, 7 days. You had a respected market commentator, Mr. Siegel from Philadelphia, who thought that we were not on the verge of recession, but that the Fed needed to have an intermediate rate cut of 50 basis points. And the market, suddenly there was panic. The next day, everything rebounded and returned to the norm. So, yeah, I think what you've just said, Peter, is correct. The economy is pretty strong. Look at the data. Look at the inflation trend. It's downward. We're below 2%, below 3% on inflation. Job data is still strong. Economic growth is strong. So, yeah, some weakness, but overall, the economy is strong.
David and
Well,
Mark.
you couldn't actually cut interest rates unless the economy was slowing down somewhat. So, I mean, one has to say that the market can't have it both ways. There has to be somewhat trending lower growth in order to be trending lower inflation, in order to get trending lower interest rates. If they want to drive either end of that particular locomotive and train in different directions, then you get crash. I mean, I think you're dead right. The growth is fine, and there is no need to panic about labor markets, and inflation is slowly coming down, and therefore you continue on your predetermined course of 25 basis points cuts.
Do we need to panic about China? The People's Bank of China meeting today, they're expected to leave the loan prime rate unchanged, although the data that we had out last week, which was pretty gloomy, wasn't it, suggests that really the PBOC needs to be doing something to try and stimulate the economy.
Are you talking to, who would you like to answer that? I panicked about China a long time ago. I think I've been panicking about China on air for about 3 or 4 years on this program, and so have all of you, actually. So, look, we know the secular problems in China. I won't repeat them because it's rather like reciting your catechism before a bishop. But what I will say is, trying to solve a secular problem, which goes back to the whole schmozzle, trying to solve a secular problem with cyclical tools doesn't work awfully well. And I think China is the living example of that. And I don't think it's going to change, because politically it cannot change.
There are a couple of troubling things. First of all, there's been a crackdown on compensation on people that work in capital markets, which may be deserved in some sense. But again, it sends another signal to the private sector that the government isn't sure what they want to do with the private sector. It doesn't make them that confidence. But also, this is a quote from one analyst, but there seems to be largely rerunning earlier episodes of stimulating supply and consumer-facing industries, which probably will have the same limited or no effect on consumption as it has in the past. As David said, there just aren't signals that things are really going to change substantially. And so people naturally are going to keep more of their money and aren't going to spend it, at least for a while. And there's some issues there. And of course, for companies who still would like the the Chinese economy to at least start to show signs of recovering, that's not good news.
I mean, look, it's rather like trying to drive a car without an accelerator pedal. If you don't have confidence in an economy, you can't get the damn thing to move. And they're not generating the confidence. The big C is missing.
Well, I suppose one of the big disappointments in the data was the property market. Still no sign of that plateauing out anywhere, is it? It was residential sales, property sales down 26% year on year. Prices falling as well and accelerating to the downside. No sign whatsoever, is there, of the property market bottoming out yet?
No, not much. And again, that's sort of key because everyone is involved in the property market. Individuals, companies, foreign companies, and others. It affects them. If there's their customers, they may have investments and so on. And it's so key to the economy, and it's hard to replace. And until that stabilizes, there are going to be all those issues that David just raised, I'm afraid.
And I mean, all the measures they introduced, like trying to get rid of the inventory and making sure that the local governments would sell this thing off for social housing and all the rest, I mean, they are simply not moving. So, I mean, again, you go back to this thing, price discovery in the housing market has been highly limited by government intervention. Because pricing has been highly limited, people don't believe in the prices, so why would they invest in them? And you go on and on. Everything. And it comes back once again, Mark, to what you said is, what does the government want? Does it want the private sector to actually create markets which allow clearing in the housing sector and therefore revival, or does it not want to put the private sector in charge of the markets? But if you're faced with fudge and fiddle, the answer is you don't get any music.
Yeah, well, speaking of music, that reminds me of the Spice Girls. Tell me what you want, what you really, really want. So there we are.
And the government doesn't seem to like equity markets either, because it's restricting more and more of the data now, isn't it? On these, for example, on foreign fund flows, because we're seeing record amounts of withdrawals by foreign investors. That data is now also going to be prohibited, only going to be disclosed, I think, on a quarterly basis. This is not really going to attract foreign investors back to the market, is it?
But this is a very Marxist way of doing things, even if the actual ideology is not that Marxist, except when it comes to the Leninist distribution of power rather than wealth. I mean, the Marxist way of doing things is to identify a problem and then prevent anybody seeing it anymore. So you say the problem's not there because we've taken away any information about it. Now please go and live your lives happily ever afterwards. That's exactly what you're doing. You're not addressing the problem.
Mm-hmm. No, that was illustrated by youth unemployment. They took the number off for a while. Now they revised the way they look at it, and now they've just released numbers that suggest youth unemployment is rising again. So
even under the new method of counting it, I think it was about 17%, wasn't it? Even
but most people think it's much higher now.
12.
Yeah,
I mean, okay, so you've jigged the figures, but you can't jig them enough to stop them jumping by damn nearly 40% in a month. Tough shit.
Let me finish on the markets, on the US markets. I mean, Barry, we've seen this now extraordinary rally, haven't we, where equity markets plunged at one stage, the Nasdaq into a bear market. Stocks fully recovered all of that decline and more some. The S&P 500 now only just 1% away from a record high. There seems to be a lot of optimism about the economy, about Fed rate cuts, about not sinking into a recession that sort of seems to be driving this. But investors who cut all their equity exposure at the beginning of the month are now having to buy it all back again.
Yeah, look at corporate profits. They're really quite good. The Walmart profit report last week was exceedingly positive. Amazon is, and these are the two big retailers in the United States. So yeah, I think the economy is doing well, and the markets reflect that. So what more can one say?
David, on the US markets, I mean, you wouldn't want to bet against them going back to a new sort of record high. But what exactly is driving this?
Well, it's two things. It's the two ends of the train. On the one end, you've got the locomotive, which is growth, which is doing fine. On the other end, the inflation says, well, the locomotive is doing a good job, but it's not driving up inflation, it's actually falling, so it's a sustainable level of speed. So it says rates are going to fall. So you've got, I hate to use this word, because when words become cliches, you know that language has all but lost its meaning. But you have a mini Goldilocks scenario. I'm sorry, guys. You have a mini Goldilocks scenario. And somebody has to cut the hair off. Or, this is going to go on. Now, how can it get cut off? It can get cut off because something damages growth or something damages inflation. You could have huge geopolitical events, but frankly, we're having them anyway, and the market just ignores them.
Yes.
So I come back to those two variables.
Well, on the inflation side, the numbers are looking pretty good, aren't they? We're back below 3% now on the PCE, and the Fed seems to be getting more and more confident that it's going to come down nice and gradually to 2%.
Oh, it won't go to 2%. There's no need. I mean, one of the things you have to say about the U.S. economy, that everything we have been saying about the U.S. economy points to it being, in a fundamental sense, exactly the antithesis to China. It is, with the exception of some flaws like the budget deficit, extremely structurally robust and entrepreneurial, unlike anywhere else. You do not need to cut interest rates in an economy like that to 2%. You might bottom out at 3.5%, but that'll be it. And that eventually will be where the market might get a bit of disappointment.
Is there also a part of this that, where else can you go? I mean, there's no other large liquid market like this where the fundamentals are lining up so nicely that when you look around the world, it's very hard to find anything else that can compete with the US at the moment.
Now, I suppose you could buy a few Asian currencies, because if the US continues to cut rates, I think the Europeans will be slower, because there are so many structural problems in Europe, including where price gouging you can make a fair claim for during COVID, by the way, but that's another story. But I would think that, you may get another asset class which will start to move. And if people anticipate that the US dollar is going to suffer from interest rate cuts, I'm not talking about 50 basis points a month, I'm talking about 25, then you can get currencies becoming, in other places than the US, becoming more of an asset class. I wouldn't bet the house on it, but it's not impossible that you're asking the question about deep and liquid markets around the world. You don't find another one like the US, because there isn't. But you can talk about currencies, you can talk about different types of asset classes like bonds and so on and so forth. So it can happen.
So Asian currencies, Chinese bonds?
No, well, the problem about owning Chinese bonds is that you might get yourself shot for doing so by going against policy. So I don't think I'll feast on Chinese bonds, but I might own other Asian countries' bonds and currencies, in a sense, for diversification. That's all.
I mean, it was interesting, wasn't it? Yesterday in particular, we were seeing a nice big rebound in all sorts of Asian currencies, the ringgit, the won, the Japanese yen, all looking pretty strong.
Well, that might be the beginning of the anticipation of interest rate cuts. But then, of course, the level of economic knowledge in those markets is no greater than the level of economic knowledge on this eminent program. And they may be all anticipating 50 basis points cuts a month until Christmas, and they might all be wrong. In which case, you might make a much more weaker, if not actually reverse case for the dollar.
Okay, well, thank you all very much. Lovely to speak with you this morning. That was David Roche, who is President and Global Strategist at Quantum Strategy. There's Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, and our US economics correspondent over in Washington, D.C., Barry Wood.
You're listening to Peter Lewis's Money Talk.
Money Talk.
And thank you for listening to Money Talk this morning. You can find more business and finance information from around Asia in my daily newsletter. As always, that's at peterlewismoneytalk.substack.com. I'll be back tomorrow. I'm going to be joined on the show by Enzio von Pfeil, as always on a Wednesday, capital preservation specialist at Financial Shield, and Carlos Casanova, who is senior Asia economist at UBP. And with a view from Japan is Tokyo-based journalist and author William Pesic. Have a great day.
Money Talk